So today we're going to look at how to draw those supply and demand zones, and I'm going to give you a tip in this video to make it really simple for you to find high probability supply and demand zones. Let's get straight into this video. We're on the Euro USD pair, and this video is for educational purposes only. There's no financial advice in this video. The first thing we need to do is we're going to open up this price chart on the Euro USD on a daily time frame. If you're trading any type of strategy, whether it be a price action trading strategy, supply and demand, smart money, you always want to start with the higher time frames. This will allow you to become familiar with that strategy, and it's going to give you the skills you need to learn as you go forward as a trader. Now, the simplest way to identify supply and demand zones, ones that you want to be looking to trade from, is to actually go to a line chart. Now, bear with me, if you've not used a line chart in the past, or you never actually experienced the use of a line chart, this video is going to be insightful to you, and it's going to help you to actually find those high probability areas of supply and demand, and you can look to take a trade off. Now, if you're looking forward to the rest of this video, don't forget to give me that thumbs up, because it does help me to know that you're into these types of videos. I don't want to be making videos each and every week if it's not the type of content you want to see. So first we're going to do is actually go to a line chart. So on a line chart, all we have is the information of price close. We don't have those wicks on the chart. It makes it easier to identify those areas where we see the market breaking structure. So the next thing we need to see is on the chart, we want to mark off those previous lows. We can see the market breaking through, making a double test high here off this area of supply. We break down, and when we start seeing the market, you can see here we break through, retest. That is a great area of supply, very good area of supply. Again, we can see another breakthrough. This small drop-based drop would also be your area of supply you'll be using. Again, we see another continuation through. There's another area of supply that broke through the structure. And again, this is the next area of supply. Now, the idea here is to read price breaking structure. You want to see where the momentum is coming from. Now, we can identify a reversal to the upside here, making a higher swing low. We break through, leaving this area of demand. Again, we break through, area of demand, new area of demand, continuation, new area of demand. And now we're creating this double high, and we're breaking through another area of demand. Do you see how quickly and simple it is to actually read where those zones are? Now, the reason we're using these zones I've drawn, because these are the zones which you can identify they break through this area of structure or retest it. Now, from here, we can identify again that the market breaks through, leaving this area of supply. This is the area that breaks this low. See, the line chart is the easiest way for you to identify your zones. Now, go away, back test this, try this yourself, and see if it helps you to identify better zones of supply and demand. So now we're going to see how I've done this. If we just remove everything again, I'm now going to draw on this chart before we go to price, so you can see how we do this, those areas of supply and demand. So first, we're going to mark off where we see the break of structure. It's important to see the break of structure where we see this area being left. Now, for now, I'm going to draw out these areas of supply and demand at these areas, and we'll just go back to price chart and we'll just look at where price would have come. So we can identify here, we're going to break out from that swing low, another breakout, retest. That's a great area of supply here. The market continues down. We break out here. Yeah, we do have a break here. Now, this may have been see, there's a reversal here. We can see nice reversal. So this is too small for a reversal for me for an entry to sell. That's why I wouldn't have used this area of supply. Now we break through. We can identify the breakout comes from the area of supply here. We continue to drop. Again, we have another break here, and we have another area of supply we can draw here. And eventually we can see the market creates this low here. We break out. We have another area of supply, and eventually the market reverses. So as we see the market reversing from this area, we pull back, we continue to break out, retest, new area of demand. Market continues higher. We have another breakout here. We can identify there will be an area of demand here. We break out again, we pull back, break out this smaller high, another area of demand here. We then create this swing high, we create another area of demand here, which broke out. Now these are more like rally-based ready zones, and eventually we create this double high. We see the market breaking out with this move up. That would be a new area of demand we draw here. So see how easily we've just drawn these areas of supply and demand. We don't have many zones on the chart. And using a line chart is going to make your job a lot more mechanical, because you'll be able to see exactly where we see the levels being broken. You're not taking into consideration those wicks on the market. That's a total different strategy and a different way to look at the markets. This way you're looking at the closed price. Now there is a way to use the wicks which shows you the manipulations. That is something that I teach in different videos in this channel, so check the different videos in this channel, see how we do this. But here we can identify, now by going to price on the chart again, and we'll zoom into each area and we'll go through this individually, how we can look at this. This is our drop, retest, and we drop away. So we can actually mark off either this bullish candle here, because it's the last bullish candle, or we can actually mark off this bullish candle right here. Now you can identify the market comes back into this area of supply. We create this double test high, manipulate up into supply, and we drop away. Again, you can either use, to be honest, this is a better area to use a supply because it's where the move comes from. So you really want to be using probably this zone here as your zone. And you can see the market does test it once, twice, comes in deeper and drops away. Now there's a way we can look at trading this, what we call a tested zone of supply and demand. Now there's more of that inside the channel as well. If you just go into the channel, type into the search area, a tested zone of supply or demand. As you can see, price drops down, we break this structure, we pull back, retest it. Look at this nice wick to the upside. What that does is, in fact, manipulates through this high. Again, that's a different strategy. There is stuff in the channel that goes through the manipulations. In fact, I will leave a video at the end of the video which goes through this type of trading, so you can see exactly how the manipulations work as well. So then we create this drop down, leaving this area of supply. We pull back in, retest it, we drop down, bounce off this low, pull back, pull down again, bounce up, and then we drop out, leaving this area of supply. Now there's ways we can look for an entry here. There's a couple of different ways we use supply and demand. That's a set and forget strategy entry or confirmation entry, or that change of character, whichever you actually know the term as. Now, understanding all these concepts, the break structure, change of character using supply and demand zones, there is another video in the channel which I did last week. That's a great video to go through and understand how you can use all these concepts together. I do suggest checking that out as well. And you'll be able to go to that video by the link above now. Now, understanding that this is the next push down, we'll be looking for price to pull back into this area of supply. So you can see the actual wick low will be marked off like this low. Does price come back in? We don't actually come into this area of supply. Now, there is a reason why price didn't quite get into this supply. Again, we had this build up of these highs here in the market. We pushed through into what I call an area of imbalance. In here, we have some orders that have been left over to be filled, and the market has dropped away. So on this occasion, we didn't come back into the area. If you'd have used the low of the bearish candle right there, you would in fact have been in. So it all depends how you draw your zones. In fact, this is the move up, what breaks through. So this is actually the low you probably would use in this example, and would have just tagged that area of supply. Then we drop down. You can see we drop down, create this basing, and we drop through. Moving to the left, you can see we create some highs again. We drop to manipulate the lows. We pull back in to this area of supply. Now, if we draw this out from the high of the zone, you see it's not actually removed. Again, it's another great opportunity to take a trade. See how simple this was to find those zones. And again, the market then creates another area again. We can see the same thing happens. We pull back into that zone. There's your high of the zone. You most probably would have had your low of the zone right there. Come in, you could have had a trade once again to the downside. Now, let's see what happens. Price continues down, makes a higher swing low. We actually reverse here. There's a reason you can see a reversal here, and there's plenty of videos in this channel which teaches you how to grab those reversal trades. Market goes back up, and we actually break this area of supply. Once we remove this area of supply, this then puts you into a bullish bias. And this has all been read just using that line chart. We went through the line chart. We didn't go through price until now. The market pulls back, make a higher swing low. What is that coming into? Well, understanding your areas of supply and demand, we know this is our area of demand. The area actually broke this high. There's your pullback continuation. So there's a great opportunity for a trade understanding this. We then continue up, make this rally base rally, and the market can't actually go to that area. We'll actually pull back to it. We then create this area of demand as well. You can see the market pulls back into this area of demand. If we just mark that off, this would be the actual zone mark from the low to the area of demand. The market goes up, pulls back in, bounces out, continues up. And again, a new area of demand was formed. We then create this small area of demand here. And just pull that down. This would be my demand zone we'd have drawn. The market comes back into that demand zone again. Look at this. Price continues up, bounces off the demand zones, all by using the line chart. We're not using the wicks for the breaks. We're using the line chart for the breakouts. This is where the body, you see how the body closes through, the body close. The body closes through. And we continue up, and you can see this is a new area of demand we now have drawn. So basically, we now be looking for price to pull back to this area of demand. You'll be looking for any pullbacks from here back to this demand zone here, and you'll be looking for that entry. Let's change that color. So you'll be looking for any pullbacks here for another long. If you're unsure how to look for the actual entry, then there is the Forex Masterclass course that goes through the whole supply and demand concept step by step. Now the links for that is below in the description of this video, and if you go through to that site, you'll be able to find there's some free supply and demand basics as well for you to grab today, absolutely free for myself, to help you understand the use of supply and demand. So that is my simple tip to you today, understanding how you can use the line chart to easily identify your areas of supply and demand. Now I know this is in hindsight, but go away and actually try this yourself on a line chart in the markets. Now I don't suggest going much lower than a 4-hour time frame. Stick around the 4-hour and the daily first, see how you get on with this strategy and see if it helps you with your trading with the use of supply and demand. Now if you enjoyed this video, don't forget to give me that thumbs up. As I said at the beginning of this video, helps me to understand if you're enjoying this type of content and you want to see more of this sort of content. But for now, popping up right now is a video I said about going through understanding manipulations in the market, how it's going to help you to understand the use of the wicks, where this video has gone through and helped you understand the price close of a candle.